This is the only way you should be marking out levels of supply and demand. This is exactly what helped me make $10,000 last month. This is exactly what's helped me become profitable and continue to get payouts and stay consistent. So I'm going to go ahead and show you guys exactly my strategy and exactly how to mark out supply and demand. So first things first, a lot of people do it the traditional way where they do it with a rectangle and they'll just mark it out just like that, right? That's not how I do it. The way I do it is through lines. So let's say this is our candle right here. For supply, you are going to want to mark the lowest part of the candle, okay? So see how I used a line instead of a square, and I marked the lowest point possible. If the lowest point was just the body, we'd be marking the body, but we're going to be marking the lowest point possible with a line. And check this out. This is where it's really going to get important. You see my time frames right here. Notice how we're on the M15 time frame just for right now. You would go ahead and you would mark this out with M15. So you mark it out on the corresponding time frame that you're on, right? And let me just rewind for a quick second for the people that don't know. The previous contrary candle, which is what I have right here, and let's just say this is the previous contrary candle, that is your level of supply and level of demand when it comes to previous contrary candles. So see how this is the last bullish candle before the move down. This is your previous contrary candle. This is the candle you would mark out with a level of supply. Now for a level of demand, see how this is the last bearish candle before the push up. This would be your level of demand. So remember, last candle before the move, that's your previous contrary candle. So going back to this, mark this on the M15. Now, let's say we were on the M5, right? And let's say, just for an example, the M5 was right here like this. We would be marking the very bottom of the candle because we're talking about supply right now. And we would mark this with M5. And we would do this for every single time frame. Now for demand, it's going to be the same exact thing. We're going to mark the highest point of the candle though. So see, in this example, this would be our highest point. So we would go here and mark M5. Let's say we go to the M1. The M1, let's say it extends just a little farther. This is where we would mark for demand. Okay, it'd be M1. Now let's say this wick is gone. Remember, for demand, we're still marking the highest point possible. We're on the M1 time frame, so our M1 would be right here at the top of that candle. So let me go ahead and put this down. Demand, you're marking the highest point of the candle. That includes the wick. It's not just the body, that includes the wick. For supply, you're marking the lowest point of the candle. So we know demand, you're marking the highest point of the candle. Supply, you're marking the lowest point of the candle. Now, if it's a little confusing right now, this is where it's about to make sense because I'm going to show you some actual examples in the market and then it should all click for you. We're going to use this candle as an example right here. So notice how this is the last bullish candle before the move down. This is our level of supply, right? This is that last candle before the move down. So this is our previous contrary candle. Now we mark the lowest point possible for that candle when it comes to supply. So we go to our line, we mark the very lowest point. We're on the M15 time frame. We're going to click M15. Now we have it labeled as M15. Let's go to the M5. This is that previous contrary candle to the push down. So we're going to go ahead and mark this with M5 as well. And if these aren't super accurate right now, I'm just doing it to show you guys, but you have to make sure it's at that lowest point. You want it as accurate as possible. So check this out. This is 2 time frames right here. If we go to the M1, let's see if there's an M1. Scroll over. Let's keep scrolling over right here. This is that previous contrary candle. This is our level of supply before the move down. That last bullish candle. So we're going to go ahead, mark the lowest point possible, mark it with M1 because we're on the M1 time frame. This is the key with the strategy. The more time frames in Confluence, the better. So the more levels of supply or levels of demand you can have within your stop loss, the better, because that's giving you a higher probability chance that the market's going to tap into that level, reverse, and go your way. And I will show you guys that here in a little as well. So just for this example, I'm just going to mark out these 3 time frames, right? Now let's say I had my short position on this M15 time frame. And let's drag this. And let's just say we had a 25-point stop loss because that's normally what my stop loss is. And let's say I was going for a 1 to 2 right here. Look at this. You can see this would have went to profit, and look how good this would have closed on the M15 time frame. You can see this M15 closed perfectly at that M15 level we marked out, and we went down. Notice how we tapped right into these levels, which let me go to the lower time frames just so you guys can see a little better. We tapped into these levels, but this is what gave us the rejection to go lower. So in this example right here, we had not one, not two, but 3 opportunities for price to reverse and go our way into profit. Let's go to the M1 just so you can see this a little better. Look at this. So we tapped into the M15, came, tapped into the M5, rejected, tapped into the M5 again, rejected, went up, tapped into the M1, and that's what gave us that big push. So look how the M15 gave us a nice little drop, right? But then that wasn't enough, so we came, tapped into the M5. The M5 gave us a little drop, but that wasn't quite enough for the market to just keep moving down. So we go, tap into the M1, and look how we just decided to start dropping from there. Remember what I just told you guys. The more time frames in confluence, the more opportunities for price to reverse and go your way. So you can see this is a perfect example. We tapped into that level, and it rejected off of it very cleanly, went back up. Now we tested the M5. Look how well we respected the M5. We just wicked into it, went down. Look how well we respected the M1. We tapped right into it, closed perfectly at it, decided to start going down. This would have been a W trade. I would have caught a 1 to 2, and you could see this just ran so far off of this level. I mean, like, look at this. Obviously, we wouldn't have caught nothing like this, but 1 to 27 basically off that level. And we would have only had a 25-point stop loss. But I just want you guys to see the accuracy in this setup right here, okay? Now let me show you guys a level of demand that's just as nice. All right, let's use this candle as an example of a level of demand, and I'm actually gonna do this one at the same time with you guys. So this M5 right here, right? We're on the M5 time frame, so we're gonna go ahead and mark M5 because we're on the M5 time frame. Now notice how this is that previous contrary candle before the push up. So we're gonna mark that with M5. Now I wanna do this one with you guys as well. So see this previous contrary candle before the push up. We're still on the M5 time frame. Let's go ahead and mark that out with M5. Let's drop to the M1 and see what's popping on the M1. Let me scroll over. All right. So check this out. Previous contrary candle. Look at that nice push to the upside. So we're going to go ahead and mark M1 right here. And remember, this might not be the most accurate right now, but when you guys are doing it, make sure it's very accurate. And let's go ahead and mark out this M1 right here. And I want you guys to be aware, there's going to be a lot of new levels of supply and demand created in the market as it's going, right? Like here's a good level right here, but I'm just showing you this for an example right now. I'm going to keep this one like it is because I want to show you guys one with a 2 time frame in confluence, but let's go and mark out this M15. Now this is a good example. So look, see how we marked out the M5, but now we're currently on the M15 time frame, but the M15 previous contrary candle is right here. But the very top of it lines up with the M5. All you guys need to do is go here and put M15 on the same line. It's that easy. So now you know the M5 and M15's right there. Let's go to the H1. Nothing on the H1 on either one of those. So we're going to go back and I'm going to show you guys these examples. So let's go to the M5 time frame and let's start with the bottom. Let's say our buy limit was on that M5, which normally I put my buy limit or sell limit because if you guys don't know, I only enter through limit orders. I don't enter through market orders. I always put it at that highest level of supply or demand, the one that I'm going to be entering in first, and then I have more time frames and confluence within my stop loss. So let's just say if we would have entered off this right here, 25-point stop loss, we would have been entering off the M5 and we would have had the M1 in confluence. Look at this. You can see this would have had no issue going crazy. I mean, we would have easily caught our 1 to 2. So that setup would have been a W, and look how clean it was. We tapped into it, rejected nicely. Now, let's go to this one. This is a nice example too because we have an M1, M5, and M15, so 3 time frames in confluence again, but the M5 and M15 are on the same line, same exact setup. So Let's go and see if this would have hit TP. Let's just close that a little more. So you can see this is where it tapped into, right? Doesn't look like it would have gave us a 1 to 2. Actually, maybe. This would have fell just short of a 1 to 2. So you can see a 1 to 2 would have been right there, but you would have hit a 1 to 1 very fast. But I want you guys to just pay attention and look how clean the rejection level was. So we did tap into the M1 right here, right? Went up a little, came back down. We tapped into the M5, M15, and notice how we just wicked into it, and then we decided to go up again. Very clean, very, very clean. Like I'm telling you guys, look how we're just wicking into it and then it's getting the rejection. This is the most accurate strategy I have tried, and I get sniper entries all the time. But this is going to lead me to a good example for you guys. I want to show you guys this. So let's say we were going for a 1 to 2. Why did this reject and decide to go lower? Well, let's look. See this previous contrary candle right here? Then we had the drop down. What time frame are we on? We're on the M5. So we're going to go over here, mark out M5 because we're on the M5 time frame. Let's go to the M1, see what the M1 has as well. M1's right up here. So we're going to mark out the M1 as well. Just like that. Let me make that just a little better. It looks like these examples, a lot of them are just the lower time frames, but see how we got a rejection from here? So the market came off this level that we wanted, went all the way up to here, and then we rejected and we dumped from there. Why? Because we tapped into a level of supply, then we went lower. Notice how clean that was though. We just tapped into that M5, M1. We did not push above it, and then we dropped. That's how clean this strategy is. And you're going to want to do this on every time frame if possible. You want to go and see how many time frames you have in Confluence. And now I'm about to show you guys just an example of your time frames in Confluence and how it's a higher probability. This is the example I'm going to be using, and I'm going to show you guys first off with one time frame in Confluence. So let's just say we had the H1 in Confluence right here, right? Let's say price is making its way down to our level and we tap into it. We get a little push up and then we break below it. Where's price going to go? We're most likely going to be going to stop loss because there is not another level of demand in this example for us to reject and give us the push up to go to profit, right? There's not another level, so it's most likely not going to happen. Let's say we had 2 time frames and we had an M5 sitting right down here. Now, let's say the same thing happens. Price is coming down. We tap into that H1. We get a little bounce, but we break below it. Where's price going to go? It's most likely going to go to this M5 and hopefully get a rejection off of there and take us to profit, because this is another level of demand and the market likes to move off levels of supply and levels of demand. Now this one has 4 time frames in Confluence. You can see it has the H1 daily, M1, M5. This is a higher probability setup compared to the 1 time frame, 2 time frame, and 3 time frame, because this has given us more opportunity for price to reverse and go our way. Let's say we don't get the rejection we want off the H1 daily, M1, and we're making our way to the M5. We get the tap into the M5. This might be the level that brings us to profit. We might not even need that level, and we might get the rejection off that very first level, which is what we like to see. We want that sniper entry. But sometimes that doesn't happen. And then sometimes you won't need to use all your levels of demand or supply because you might only use the first 2 and then it might go to profit, right? But the thing is, you want as many of these levels in Confluence because that's giving you a higher probability to reverse before it goes to stop loss. And it would be the same exact thing for supply as well, right? Supply and demand, it's the same exact thing. It's just supply you're selling, demand you're buying. Your line with the time frame is going to represent a level of supply or a level of demand. You just need to mark the previous contrary candle, and remember, for demand you're marking the highest point, supply you're marking the lowest point. I'll show you guys how to make the template just like this. You're going to want to go over to your little sidebar and you're going to click horizontal ray. You're going to click it just like that, and you can edit it how you want. You can have just a solid line, you can have a dash line, dotted line, whatever. I use the dash line and I have it as a black line, but realistically you could have your supply lines as one color, your demand lines as one color. It's whatever works best for you. And then you're just going to want to put like the time frame and see how it's like that. And you can have it on the top, middle, bottom, whatever you like, right, left, center. I always have mine on the right closest to these numbers over here. You can change the color of that. And then you're just going to want to save the template as like M1, M5, whatever time frame you're working on, and then click OK. And that is how you're going to mark out your levels of supply and levels of demand. This is way more accurate than having just a rectangle drawn. You're looking and analyzing at every single time frame and realizing those setups that have more time frames in Confluence, that is going to be a higher probability setup, and that is most likely going to go your way. Now, it's not 100%, but it's going to give you a higher probability setup. I just wanted to come on here and make a video on how to mark your supply and demand because I keep getting asked this question on Instagram and stuff like that. So I figured I might as well go ahead and make the video. Make sure you like and subscribe, and also leave a comment if you have any questions, and let me know if you've seen supply and demand used like this. And if not, definitely use it and back test it, and you'll see how accurate this strategy is. If you guys want to follow me on Instagram, you can follow me at OAlexZ, same way my YouTube username is. And if you guys want to trade live with me, click the link in the description or click the link in the bio. And if you want to apply to my one-on-one mentorship and learn exactly everything I know, make sure you click the link in the bio, and I will see you guys in the next video.